the 1st of not November, 1st of September. It soon will be, I'm sure, the 1st of November, but time's moving fast enough without giving it too much acceleration. Clearly, we are in the reverse of last week, which is hence the volatility of this market. On a sort of declining market this week after the sort of significant rise last week. Trading this morning in Asia just above or on the money at $95 on Brent. And given that Clyde Russell coined the phrase of last week, he's going to get the opening word this morning. Jawboning. Clyde Russell, Asia commodities and energy columnist at Thomson Reuters. Will Saudi Arabia's energy minister's jawboning up the market succeed? It looks like we've been up the mountain and down again.
Yeah, indeed. I think, what you've seen in the paper market is an increasing disconnect from the realities of the physical market. And, I know that the Saudi energy minister and other OPEC figures were sort of complaining about the volatility and that the market in the paper market isn't quite working. Well, they're actually, quite frankly, part of the problem, because, who wants to trade in a market when an energy minister can come out, say something, and suddenly the price is 10% higher than it was, 20 minutes earlier. And then equally well, in a few days, it's back to where it was. Who wants to trade in that market? It's not going to work. So I think, in some ways, OPEC is part of the problem. They clearly want oil to remain, around this $100 level. But I think, having to swim increasingly against the tide. You've got an energy crisis in Europe that's turning rapidly into an economic crisis. You've still got weak demand for crude coming out of China. They've now locked down Chengdu. That's 21 million people. Bam. There's all sorts of problems still going on. And it's going to be increasingly hard to jawbone that sort of, the oil price higher, I think.
Let's welcome Lori Hatayan, MENA Director, Natural Resource Governance Institute. Lori, can anybody jawbone the Iranian JCPO agreement back into life? It seems to be endlessly the dog chasing the car, the whatever analogy you want, the boy who cried wolf. Your thoughts on where that particular geopolitical momentum is at and where it may or may not impact the markets?
Yeah, so definitely now we're hearing more of positive signs coming out of everyone saying that, yeah, we're almost there. The EU is saying that, yes, we're there. And the Iranians are saying, yeah, just a couple of issues to solve. And the Americans are saying, we read carefully what the Iranians wanted. They're discussing and coordinating with the Israelis so that they don't upset the Israelis before any kind of possible deal. So these frequent calls between the Israelis and the US administration makes it feel that as if a deal is almost reachable. That's why they're trying to calm down the Israeli government and politicians. But again, this is not the first time we had this positive signs, and then something happens and all the deal falls apart. So until we reach a deal, we don't have a deal. So let's be careful, because at the end of the day, Iran is interested in the nuclear issue more than anything else. Yes, definitely removing sanctions, going back to the market, definitely, and they feel that today more than ever they have that chance. Soon there will be the ban on the oil. Russian oil is going to come into effect from the European side, so it's good to have at least a sign that the Iranian oil is coming back, at least coming back, not in the dark, coming back in the light, like legitimately. So I think this is why the EU is pushing, and the US is saying that, yeah, maybe that's the right time as well, because they were not very happy that after Biden's visit, they've seen like only 100K increase in production from OPEC plus. So they were like, okay, so there is kind of interest and incentives to go back to it. But again, just to say that until a deal is signed, I don't see there is a deal, just to be careful. because you never know what could spoil this thing at the last minute, especially the demands and the guarantees that the Iranians want, guarantees that I think the administration and the political system in the US is not able to provide, saying that any president that comes later is not allowed to go back on their deal, etc. All of that. So let's wait and see.
Ole Hansen, Head of Commodity Strategy at Saxo Bank. Ole, welcome back to the table. If we take Clyde's sort of perspective of, and generally, I suppose, the view of the markets that OPEC, or at least the Saudis last week, were looking to defend at least $90, if not try to jawbone it back up and defend $100. Realistically, what price should OPEC save its weaponry for to defend in what is a globally economic weakening outlook?
Well, that's a good question. Most certainly, I would say it's lower than where we are right now, because yes, we are seeing a $10 move within a 48-hour time span here this week, clearly indicating this market is somewhat in a flux, disconnected to a certain point, low open interest, volume not strong enough, and that we have to react to from one word to the next from a Saudi minister. So at this point, I think we're still obviously in a range. So I think we'll need to see a break below 90 for that really to happen, because what it really is a concern if we start to see quite an aggressive amount of speculative selling coming back into market, which obviously could dislocate the futures price from the underlying fundamentals. So far, we're not seeing that. Interest has come down, but just up until last week, we saw the biggest addition into the energy sector, both fuels and oil since January, and that's probably part of the problem that a lot of people got wrong-footed by the Saudi comments that took it above 100, and now we're back below, and some of the long liquidation has to take place. So I'll be watching whether we are seeing a build-up in speculative shorts. So far, we're not seeing that, and only then can we start really talk about a proper dislocation between the price and the fundamentals.
Clyde, one of the big sort of questions probably OPEC Plus is asking themselves ahead of their meeting next week, and maybe we're all asking, is how weak is China exactly? We saw reports by Reuters out overnight that Asia's factory activity has slumped, not just in China, but across Japan, South Korea, Taiwan. They're all signaling sluggish and declining factory activity. How weak is China, and how serious should OPEC Plus take that into their considerations?
I think it's fair to say that China's not anywhere like as strong as it was in the past. I mean, we're expecting August crude oil imports will be under 9 million barrels a day again. That would be the third straight month where they'd be below 9 million barrels a day. You're talking a country that averaged about 10.5 million in 2021, and even more in 2020 when it bought up all the cheap oil, during the pandemic. But you're really saying that right now China's a million and a half barrels a day down on what it was doing last year. That's significant. I think, and I don't really see any momentum for that to change. Yes, we've got lockdowns. We've still got some issues around, sort of getting the economy stimulus working. It seems to be taking longer than it usually does. We've got property development issues in China. And the other thing that we've got is a very low product exports, where China used to be quite a big exporter of products. That's kind of gone away. And I don't see any of these things coming back in the second half. So I think you got to factor in that China's not going to be a 10 to 11 million barrel a day import country. It's more likely going to be a 9.5, for the foreseeable future. And I think, OPEC and everybody else has to look at that.
Clyde, is that due to a weakening consumption, or obviously China has built up a lot of inventory? Even the first half of the year, this year, it was building inventory. So even though now the imports have dropped off, there's a lot of inventory that they can draw on. So where is consumption versus that lower import number?
Well, I think if you actually look at their fuel sales figures, they're sort of steady without being spectacular. So what you're really seeing is, yes, they're using up a bit of inventories, but as you pointed out, they actually were importing more than they were needing in the first half of the year. So they've still got the capacity to import even less should they choose to use more inventories. They also are busy switching quite a lot of their oil around. They are buying what the Russians are selling. Russia has been their top supplier for the last couple of months. Expect in August that might actually tip back to Saudi Arabia, but the fact that the Saudis are now actually vying with Russia as China's biggest supplier is of interest and should be an alarm bell for the OPEC part of the OPEC Plus group. But if you actually look at there are all sorts of other things that are at play in China. Electric vehicle sales are absolutely skyrocketing. They're almost like a third of total new vehicle sales. That sort of thing, when you talk a market the size of China, does sort of ultimately have some kind of impact. And so I think you've got inherent economic problems, particularly in construction. You've got a nice big buffer of inventories should they want it. And on top of that, you've got a lack of export quotas for refined fuels. None of this is particularly bullish for Chinese oil imports.
Laurie, looking at the point of OPEC Plus and the Saudi interjection last week and the OPEC Plus meeting this coming week, what are your own thoughts as to why the interdiction happened last week? Some analysis I've heard is that it was a sort of signal from Saudi to Washington saying, easy up on that Iran deal. We're not that keen. Look what we can do to the oil price. Your thoughts on where the geopolitics and the OPEC Plus decision making now goes forward?
Look, definitely without speculating and anything, but I think like the trajectory or the decision now next week will be not to increase. Definitely these talk now saying that we already have like this 400,000 surplus and that we're not seeing any kind of encouraging information coming or encouraging on the demand side. So I think that the projection is made most probably they will not increase, and they will keep on discussing about this cut. Like when there is a need to cut, we will cut and we will intervene. Because at the end of the day, I think two issues are very important as always for OPEC and OPEC Plus. First is the economics, of course, and to keep a price that is acceptable for the producers, because they do have most of them, their economies are built on these revenues that come from oil and gas. The second, with the economic pressures that are coming, so they don't want to have to worry again about a decrease in prices, so that will put pressure on them on their budgets, etc. And they don't want that to lead to some kind of uprising or anxiety inside the populations of these countries, so that this is the last thing they would need with everything that is happening, people on the streets, with inflation, recession looming, etc. So it's important for them to keep a price. And that's why the signal was that if we need to cut, we'll cut as long as we are keeping a price that we think is important. And plus, they want to keep and safeguard that OPEC Plus group, because actually, these people are saying that today we don't see that why we should align against Russia. We do have some interest with Russia. Russia was very, not loyal, but they kept their word when we needed, and the deal that had been happening since 2020, etc. So we don't want to upset them. So these are the two most important things for OPEC Plus and for OPEC and for the Saudi leadership. So it's politics and economics at the same time mixed, and this is why we're getting all these messages coming out of the Saudi leadership.
There's no doubt that when you just scan the headlines of everything that happens every day in Saudi Arabia, just in relation to NEOM, which is this $500 billion mega fantasy city, you're going to need oil prices at least at $100 a barrel for as far as you can see. And you would imagine, if these two things are coexisting together, there's going to be a lot of jawboning going on, as Clyde might say. Ole, one of the things I'm trying to get my head around is that it's clear that everything about the European energy crisis is in the gas price. There's no doubt, obviously, the electricity, natural gas, LNG, everything keeps breaking through yet more and more ceilings. But I'm still not sure how much of this crisis is in the oil price. And I wanted to get your thoughts about that. Where is the European crisis intersecting with the oil price? Or is it there yet? Is it bedded in?
It's most certainly been there for a while now, Sean. I think we've seen the fuel switch really picking up speed in Europe. Also, just recently, the dislocation on the River Rhine added some further confusion to the equation. But we're seeing refinery margins in diesel be very strong in Denmark right now. Diesel is higher priced than gasoline. That's only happened 3 times the last 20 years. So I think that's a good sign or a testament to the fact that the diesel prices are being bid up right now as a substitution, because obviously when you have gas trading at the equivalent of $300 per barrel crude oil, and electricity last week above $1,000 per barrel, then obviously any fuel related substitution is viewed as being very cheap at this point. So it's there. Europe is very energy hungry, especially into the winter. Industries who have generators, they will be hoarding diesel in order to try to ensure that they don't have to turn off production. So I think it's there. Whether it's overall having a how much in terms of global impact in terms of supporting the price of oil, that remains to be seen, because right now obviously at the same time we're seeing gasoline margins falling off a cliff. We're coming out of the summer driving season, so we got the gasoline margins coming down while diesel margins remaining relatively firm.
Do we have, or what scale of fuel switching exists in Europe? The option for that, given what they're facing on the gas side, is how much of fuel can we expect, or is it scale? My understanding is it's not as great as they would like it to be, obviously.
No, we obviously have not been going in that direction for a number of years, away from fossil fuel consumption, and that basically means it's not a major pickup. But where we potentially could see it is, I suppose, is in Asia, where there's much more, I would imagine, capacity to use fuels, especially when we come into the winter with diesel and heating oil becoming an issue. And we're also seeing the gas flows into Europe, which has been very strong in recent weeks. Those who have received less gas has obviously been Asia, especially China. Whether that's going to stay like this, I doubt. So we will see a competition for gas, LNG, into the autumn, and that basically means Asian gas prices will remain high, and that will also support that switch in probably more in Asia than in Europe in terms of actual barrels be going in that direction.
Let's get the survey question in, and that we'll post on social media today, and get everybody's views on this theme of, where should OPEC, what oil price can OPEC Plus realistically defend in a weakening global economy? If last week was some sort of signal that they're looking to defend 90, where will that go? And now we're obviously migrating back towards 90 again with an OPEC meeting on Monday. So I asked the room, realistically defend a weakening oil market. Welcome the views on that. Clyde, I just wanted to pick up on the theme you mentioned there earlier about what we might say in China, the sort of the old economy is clearly spluttering. The real estate, building, construction, even manufacturing, perhaps cheap and cheerful products for the world. But the new economy, as you indicated, towards the EVs and so forth, does seem to be motoring ahead, still hitting double-digit growth numbers, even in this cycle of COVID lockdown and everything else. Can you just speak to us a little bit about what we're seeing in China now, behind all of the sort of distracting headlines of COVID lockdowns, is actually a transformation of an economy that's been underway now for a number of years?
I think you kind of hit the nail on the head just in that summary. I think it's almost the biggest thing that's happening in the world economy right now is China is going to have to transition away from the model that took it from where it was in 1990 to where it got to 2020, say. And they're going to have to think of a new model, moving up the value chain in manufacturing, having a much more consumer-driven type of economy. And it doesn't mean the old economy disappears. They're still going to be very big on construction and things like that. But there's only so many bullet trains you can build, only so many airports. I don't think we're at the point where they're actually finished all that yet. I think we're actually still some way from that. But you are starting to see that economy transition. You also got to remember that, I mean, the Chinese are installing more renewable energy than the rest of the world put together. And they're doing it year after year after year. This sort of thing does eventually make a difference. You know, you end up getting that sort of size and scale coming through. And none of that is bullish for oil. And quite frankly, it's not actually really bullish for, you know, the seaborne coal market or the LNG, ultimately, because you're removing, you know, China will become a steady consumer of commodities. It won't become the growth engine. And I think that's the big transition that's underway.
Do you think it's fair, Clyde? We had it, what a headline coming out of our beginning every January. We have a outlook of the year forum. And one of the big takeaways in January was a call that maybe China has reached peak oil demand. It was somewhat dismissed at the time. Is that a reasonable concept to consider now, or is that still not there? What are your thoughts on that?
Well, I would be very brave to say China's hit peak oil demand. I
mean, in the zone, you know, give or take a bit here, a bit there.
I think we're getting closer to that sort of scenario than we were, you know, and people should start anticipating that China will reach peak energy demand fairly soon. The other thing that people really don't talk too much about China is there's a demographic massive shift coming there. They just simply are not producing enough new people to replace the existing people. China in the next 20 years is going to be incredibly focused on looking after an aging population rather than, you know, doing a whole lot of growth things that it currently does. So there is a massive shift coming in China, but it will be slow and it won't be obvious. But what I do think is if you're looking at commodity demand and that, China is going to remain a huge consumer of commodities, but is going to become what I term Japan-like. In other words, Japan buys a certain amount of oil every day, it buys a certain amount of LNG and a certain amount of coal, and everybody just accepts that that's what it does. And it hasn't really varied that much in the last 20 years. China's going to get to the same sort of point. It's going to buy quite a lot of oil, coal, LNG, and other stuff, but it's not going to vary as much, and it's not going to be the, you know, the huge jump up that we saw, you know, when they went from importing very small amounts of crude oil to importing up to 12 million barrels a day. It's at one point. That sort of growth is just gone. China's just going to be big and boring.
Laurie, can we get to anything resembling big and boring or consistently predictable about Libya? What's happening there? We've gone through a very turbulent window. There was a sense that it was also supportive of oil prices recently, not just the Saudi comments. 1 million barrels of supply there, still vulnerable.
Look, Libya, Iraq, and Iran. This is where we should be looking at in the coming few weeks. Because again, Iran, we're not sure the deal is going to happen or not. So what will happen to that extra oil barrels that we think that will come to the market? Libya, now they had these clashes. Yes, definitely for this round of clash, the oil and gas installations and fields, etc., were not touched. But that doesn't mean that in the second round, it's not going to be affected. So again, now everybody's going in Libya to Turkey for a negotiation round. Let's see what will happen out of that. But definitely, as long as we don't have a clear path to political recovery in Libya, we will always look very suspiciously into the oil and gas, the oil coming from Libya, and that's important because it will have an impact positively or negatively on the prices. And Iraq, in the last round of violence that happened, they were going after the fields in Basra and other places. And that was really scary. So now we don't know exactly where the situation is going. Like, it seems that everything is maybe kind of back to normal. The Sadrist followers are backed from the street. They're back. They're not on the street.
Can you just give us a little bit of the geopolitical connectivity there? Sadr, Shiite leader, very powerful. connected or disconnected from Iran? Where's the bigger picture connectivity of the issue there?
So to say that Sadr had been lately very vocal against the Shia control of the country, and he and his allies won the elections back in last year, and they were unable to form a majority government, which he wanted. And there were the other Shia movements supported by Iran that really wanted a unity government, saying that everybody comes into government and we're all sharing whatever we're sharing, that pie of lucrative pie of Iraq, and especially the oil and gas revenues. So, and he was unable to form. So there was a deadlock, and then he decided to resign from parliament, and then he called people to go on the streets, and it turned a bit out of control. And then now he's back saying that I am withdrawing from politics, and now I'm calling my people to leave the streets. But in the couple of days that they were after the oil fields. That was a really, I think, a red flag for the Iraqis themselves, because this is the only revenue they have. They have nothing else. And if they have like problem in that, so that it means that they will add more problems to the political deadlock they are living into it. So that's the picture we have. So it's very volatile, and it's something to look at, because we are looking at where these prices will go. What prices are we going to defend? So I think if we lose Iraq, if we lose Libya, losing means like portions of that, and the Iranian deal doesn't come through. So we're heading into troubled waters.
It is very interesting in the sense of both countries where they had fractured down to their tribal definitions, which obviously have splinters in so many levels. And then over the last number of years, they're trying to put some kind of a national identity back to close down the sort of groundswell of fractured tribalism. And sometimes the national is winning and it sort of seems stable, and then the tribal comes up and pushes it away. And in that, and while that remains incomplete, where the national identity can return, these very large oil producers remain very vulnerable. Ole, let's give you the last word here with the survey question result view of this room before we post it on social. Realistically defend $90 a barrel. Ole, I wanted to get your thoughts on where this intersects with the outlook for inflation and interest rates. We all consensus now moving to another 75 basis points on the Fed in the coming weeks. And now the ECB are joining into that accelerated rate hike program. Equity markets are feeling it. We thought energy might not be, but maybe energy is going to come under the same gravity. Where do you see those intersection points going forward?
Well, it's interesting because obviously, if we allow, if OPEC allows the oil price to drop, say down to the 70, 80 area, that obviously would also remove some of the pressure in the central banks. That in turn would reduce some of the growth concerns that we have globally. So it's a give and take. Energy is such an intrinsic part of everything in terms of keeping the wheels running, and that basically means that the lower the cost of that will also remove some of the pressure. So it's an interesting conundrum we're facing here, and obviously at this point probably OPEC is not looking at them to be the savior of the global economy by allowing prices to come down, but obviously that would be how the market would be interpreting a lower oil price, basically looking for that to have a soothing impact on inflation, which is still a major concern, and probably one that's going to take longer to get down than we at this moment in time anticipate.
Yes, certainly the speech last week by Jay Powell seemed to indicate higher rates for longer, and trying to get the Wall Street and the financial industry to grasp that concept. I don't know what the Saudi oil minister was doing last week, exactly what concept he wants us to grab, but I do think there's something there that he does want us to grab, and maybe we'll get more clarity on it next week. But it'll be interesting to see. I mean, I'm half joking on the NEOM thing, but I do think there is a big dollar number on the price that Saudi Arabia wants to defend, because it has put out some very, very big goals, not only goals, but has signed some very, very big contracts to pay down lots and lots of money on massive transformation in the country. The revenue required for that, as we all know, is quite big. So what price are they going to defend? could Saudi Arabia surprise us? That wouldn't be a surprise, because he said last week that he was going to maybe looking at a cut. We have to pay attention when he speaks. At least he's probably earned that right, given what he's achieved over the last few years. So as we go into the OPEC Plus meeting next week, I wouldn't totally dismiss that something might be cooking in the kitchen, at least worth thinking about. Laurie, thank you so much. Great to see you guys again. Clyde, as always, from Australia, great insights. And we didn't even talk about the collapsing housing market in Australia. Maybe that's an exaggeration, down 1%, no big deal. But maybe it's the cuckoo in the coal mine for what's coming on real estate across the Western developed world. Ole, thank you very much. Great to see you.
Yep.
And have a great weekend, everybody. We're back Sunday morning with Mike Muller and Christoph Ruhl. Certainly be interested to see their take of where everything's going as we move into the real days of September versus the somewhat uncertain ones of August. Thank you. Have a